Here we go. Hello, welcome, and good morning to everyone. And welcome to Behind the Markets, to all the people who are joining us today from all over the country. And a good morning to you, my brother Vernon. How are you?
I am doing as handsome as I look. Thank you very much. How are you?
That's a level of confidence. That's a serious level of confidence there. I will not downgrade you, my brother. I'll leave that be. You know, it's not nice to tell people. It's not always nice to
Absolutely.
tell people the truth, as I was always told when I was younger. The truth, it's
I
not
really do
always.
not like default answers. How are you? I'm fine. How are you? I'm okay. How are you? I feel I will answer you exactly how I'm feeling at that precise moment. Right now, I feel really handsome.
And hey, man! You know the secret weapon of a young man is his confidence. I'll tell you that. That is the absolute secret weapon of a young man. So today, but it is we are basically back in the firing line. Not much has gone on since yesterday. We did have a little bit of a change in the market, but not much has gone on. In terms of, we're gonna go through earnings seasons, a little bit of the data from earnings season before we give our consolidated report on how earnings have transpired throughout the season this year. So we sorry, how earnings have transpired throughout the season. We are also going to be looking at mainly how the markets are doing, and then in our deep dive today, I'm going to just go veering off a little bit because there isn't much in terms of the news aspect. But we're going to be going into, obviously we're going to be touching on that international issue of Credit Suisse and UBS and how that affects us going forward, especially the fact that there is a bond auction coming up very soon. We need to just pay a little bit of attention to see how much we're seeing in terms of maturity and what's the likely outcome of that bond auction. It being the third one of the month, we should probably see a little bit of maturities coming in, giving the cycles going up, but I will talk about that. And today, Vernon, I want to talk about reading culture. It's actually a very important topic that we seem to like skirting a lot. Reading culture and the importance of making sure that our people read. Because I think we take this for granted as if people are just supposed as if people are just good at reading. And also the fact that we take it for granted that information will just fall onto our laps and we'll have much better decision making systems, but we seem not to think not to put value on reading. So those are the main things that we're going to touch on today, and then obviously we're going to start going through. I remember yesterday we did miss out the conversation on career capital and building career capital and the importance of it. But let's start off by going through the markets today, Vernon. The first thing, obviously, on the markets is that we are seeing that we are on day 113 of the Kwacha losing value. So day 115, not 113. Sorry, missed out on that one. Day 115 of the Kwacha losing value. And right now, we've seen that we've continuously lost value. The Kwacha is only 8% now away from its all-time high. Yeah, don't forget, people, the all-time high on the Kwacha was very, very high. We're in the 22s. So we're still about 8% from where we were in terms of the all-time highs. But going into the direction here, we are seeing that the dollar, sorry, is up 15% year to date. So holding up 15% on your portfolio year to date as it stands, versus, let's say, the Rand, which is only up 5.14% year to date. You are seeing that during this period as well. In the last month, the dollar has gone up by 6.8% versus the Rand, which has gone up 4.48%. And this is way above inflation. So we're still in the defensive part of the markets so far. And this is the midweek reading. So for now, we're also looking at the bond markets. We've seen that bonds are up 0.06% yesterday and up 4.48% yesterday. There was a little bit of a push upwards, but in terms of in USD. Versus USD, your bond index, secondary market bond index is down 0.64%, showing unfortunately that bonds have taken a bit of a beating this time. But we did see interest rates start to climb downwards, that they're down for the week about 0.07%, showing that there's a little bit of purchasing happening in the secondary market of the bond market. Now, going into an auction, that sell-off really, I think, did take a divot into the market. And it did take a big hit into it. So it does actually put things on a little bit of a back foot. Now, yesterday we did see the stock market also take a trend downwards. Again, the stock market has been seesawing recently throughout the last bit of time. The stock market has been going back and forth and struggling to actually hold a position. But we are seeing the stock market again is down for the year 0.47%. Now, in the commodities side of the market, So in the commodity side of the market, we did see that oil did bounce back a little bit yesterday, up 2.59%, while copper's up 1.07% as the fears of the banking crisis start to ebb, and we did see therefore gold start to sell off as 1.27% down, a bit of a position. So that rise up on gold was similar to what happened when the Ukraine war started, but then it started to sink down again. And this happened at the beginning of the year. We did see gold rise up, then sink down, then it's back up, but it seems to be trying to push upwards. Now in Kwacha, obviously gold lost about 0.56%. Year to date, gold is up 22.29%. But the thing that's still rallying, oddly, is Bitcoin. And I think it's got to do with the banking crisis, mainly because Bitcoin is tied to the creation of Bitcoin, if you remember, was actually tied to the failure of the financial system back in 2008. So Bitcoin was born out of a revolution against the financial system. Now we are that most stocks in the global system are actually starting to pick up because of this. You're seeing Asian stocks up as banking fears ease before the Federal Reserve meeting coming very soon. Oil dips a little bit in the morning. This was just a few hours before, but it did trade strongly yesterday, but it did dip a little bit on two pieces of news. U.S. stockpiles did rise, and the banking and obviously banking fears, at the central bank meeting. Some of the other big news that we have seen is gold prices mute ahead of the Federal Reserve meeting. So there is a bit there. Everyone's trying to wait for what is the Federal Reserve's outlook. It's not what their action is going to be. And Sri Lanka received its first tranche of its bailout package of about $3 billion yesterday from the IMF because Sri Lanka has had to go on a package to try and fix itself from what has been transpiring with it. Remember that Sri Lanka's debt is basically imploding. Sri Lanka has more of a debt than Zambia. That's why everybody's taking a look at Zambia right now to see how we are managing. And yesterday we did get, the day before yesterday, we did get a piece of news from the head of the World Bank who said he is concerned, the outgoing head of the World Bank who said he is concerned about how long the Zambian debt negotiations are taking and what implications that will have on the Zambian people. So good morning to all. We are giving you a live going through of the market, of the midweek markets. So now... Sorry about that. We did see that yesterday. We did get some data coming out of the markets in terms of we did get a bit of data coming out of the markets in terms of the economic calendar reads. One of the big ones, obviously, was yesterday's big news in Africa was that Nigeria gave a surprise interest rate hike. Everyone expected Nigerian interest rates to come in low, but they actually came in surprisingly higher, they moved up to about 18%. The Central Bank of Nigeria raised interest rates to about 18% when the market was expecting them to drop them to 5%. So everyone was expecting a 50 basis point. Nigerian government said, "Whoops, we're going the other way." They were expecting a 1% drop when the Nigerian government said, "Whoops, we're going the other way with a 50 basis point hike." So I think the markets got shaken off there. Oil did see that U.S. crude stockpiles also did go up 3.6 million barrels of oil. We did see Canadian inflation continue to slow down, while we saw car registration. The Italian and the UK car industries are slowing down, while the German car industry is actually picking up. Now, existing home sales in America did rocket back up. 4.58 million homes were sold in the US, up 14% month on month from the previous one. And it is heading for a strong, it seems to be there's some signs of a recovery in the US housing market. That's the global economy outlook. In terms of that. Now, if you're looking at your wealth insurance assets, and I have to stress this for everybody, wealth insurance assets does not mean that you go and dump all your money in one of these. Diversification is one of the ways you protect your money. Okay, you must diversify it correctly, and you must do something called risk balancing. You know, one of the reasons, Vernon, a lot of people lose money in investment is because they don't balance risk. Okay, when something is 3 times more risky than the other, you're supposed to put 1/3 of it. So you have to then do something called risk proportioning. So this is what happens with a lot of people. They look at the rate of return that they might be promised to get, because I can see it in the way people ask me. So if I put this much, how much will I get? You know, that's the statement people make. So you can see that investing is not a culture for Zambians. It's an instance. For a lot of us, it's an instance. So we're trying to convert investing in this country from one instance of wealth. It's not the lottery, it's not playing a sports bet. It is a consistent habit of accumulating wealth in a very efficient way and risk managing your wealth by not exposing it directly to the elements, but by having a market that has purely vetted the companies that you're investing in. So let me just give you a simple example, Vin. Why do people invest in stock market companies as opposed to investing directly in companies? Well, the reason is where the stock market has vetted your company, okay? They've checked what are the financials of it. They've requested that there must be a board of directors. To be on the stock market, you have to have gone through consistent years of profitability. So your business model must have been proven, okay? So you have to have been in existence for a bit of time. Direct investment in a company usually leads to exposure to many things. So I think, and then you also cannot exit easily. So the reason you utilize a stock market or any capital markets for investing is actually specifically to manage the risks of investing. So if you're on the markets, you should be risk conscious. But the psychology I'm trying to explain, Vernon, is that the thought process between the Zambian investor is that they treat wealth as an instant occurrence. Okay, they treat the acquisition of wealth as a single moment. There's a moment where I'm going from broke to rich. Okay, so that's the moment. So everybody works hard, but works hard for the realization of a moment, not the gradual improvement. Okay, and that's the difference. This is why there was a presentation done by a gentleman named Dr. Jawanza Kunjufu. Ironically, he's from the US. He's not even from like Nigeria or anything. He's from the US. I personally think he made that name up. Okay. I personally think he just thought, okay, this sounds African, so I'm just gonna take it because I'm looking for where Kunjufu is in Africa. But anyway, Dr. Juanza Kunjufu was actually he's a US educator, and he was actually saying, there are a million black boys who are training to try and get into the NBA. Okay, but he says the NBA takes less than 20 of these people, like the superstars, like less than 20 of them are gonna get in there in a year. So imagine a million of our people are putting their effort. But he said there are tens of thousands of jobs in computer science. But we're here building basketball courts in our neighborhoods instead of building computer science labs for our kids to start learning how to code. And he says that's the funny thing. He says instead of going after where the $100,000 a year jobs in computer programming are, we're sending our children to the once in a lifetime or the 1 in a million chance of trying to be a basketball player. Okay, and this is what happens because we've trained our minds to believe in the instant of wealth rather than the accumulation of wealth. And I've seen people say, no, but our people work hard. Yes, they work hard to acquire that moment of transition, that instant moment of transition, that shot to the arm. Somebody will work extremely hard, Vernon, for a huge deal, a single deal that will transform their life, instead of creating a product that will slowly build their wealth. Okay, so that's the difference. And that's why when people invest, they approach it through that lens of the single instance of wealth as opposed to the time, the honoring. So this is just a mindset shift that I wanted to take a look at. But anyway, Vernon, getting back to this, why I was building this up is because when I start talking about my wealth insurance assets, you do see very strong performance in cryptocurrency. Like Bitcoin is up 94% year to date. In Kwacha, Ethereum is up 78% year to date. So now the instant thinkers will think, I put my money all in Bitcoin and Ethereum. And then when it gets vaporized the next time, they start saying, but you led me astray. You see, this is what we mean. Now, the accumulators of wealth will say, I'm keeping 85% of my portfolio in the stocks and the bond market. I'm going to buy a little bit of gold, buy a little bit of Bitcoin so I can level it off and I can have a smooth journey of accumulation. But it requires resilience, it requires persistence, and boy, Vernon, does it require patience. The most important thing, it requires patience. Yeah.
I think this mindset of having instant cash or instant wealth, whatever they want to call it, has actually even given so much momentum to scammers, because they know what you want is a lot of cash now. You want the money now. So you send me 1,500 kwacha, you're gonna make out 2,000-3,000 kwacha in a space of 2-3 days, and then the person just decides you want instant cash, you want to win fast. So that's the I think that's been their capital with regards to scammers. And we know, according to reports, we've heard that actually African countries have been the most hit with scammers, from Bitcoin trading, blockchain, businesses everywhere around the world.
Currency
Africa has been
trading.
mostly because we have this mindset. Yeah.
No, it's because we have the escape poverty mindset. And we don't build out of poverty. We want to flee it instantly. And I understand where it's coming from, but unfortunately, that's why that's why we talked yesterday about things like sports betting. And I can tell you that these things are chewing into society. So just one of the things I want to just quickly put down here. Going through my four horsemen, Vernon, we are seeing the Canadian inflation, like I said, is under control. Nigeria does surprise people with a 0.5% rate hike as opposed to a 1% rate decline. Wall Street has been continuing to rally based off the fact that the fears of the banking sector are ebbing, and also banking fears have taken a hit to investor confidence going forward. And we talked about the car industry. The European construction industry also did come back. So we are seeing industrial growth coming up as well. Sales growth also starting to come up, but interest rates also starting to take a little bit. Interest rates in capital markets starting to take a little bit of a beating from the banking crisis. But inflation still continues to show signs of coming downwards. One of the reasons, even in Zambia locally, why we'll see inflation starting to slow down is probably because the energy markets are not showing signs of hiking. Now, the only problem we have is, unfortunately, we have got changes happening in the supply chain, so our calculations may slightly be off. Remember that there are major changes happening in the supply chain as we speak right now. They're trying to give fuel, trying to give oil through a pipeline, diesel oil through a pipeline, and we're trying to work on how we're getting our finished products and also the blending part. So this month we're supposed to be getting news as to what that is, if we're waiting for our Minister of Energy to give us news in that perspective. Now, in terms of the big story yesterday, one of the biggest aspects of the big story yesterday globally, going into my deep dive, Vernon, the big story yesterday was Credit Suisse and UBS, the two big banks of Switzerland, merging. Now, if you take a look at the financials of it, Credit Suisse had about 500 billion Swiss francs in financial assets. I mean, in total assets as a bank. While UBS has about 1.1 trillion. So effectively, for the purchase, Vernon, of just $3 billion, and I'm using the word just $3 billion because you're talking about a bank that has $1 trillion, okay, sitting in it. Okay, and another one which has about 500 billion. A bank and yesterday, a bank that wasn't like in turmoil or anything internally. It was just the stock price was free falling and everything. But a bank was falling, Vernon. It fell quickly to the point where it was purchased for $3 billion when it has a $500 billion in assets. So some of the bondholders are having problems. Now, there's something called CoCo bonds. That was the big conversation that happened yesterday. Convertible bonds that are set that they take up a higher risk. Now, banks were able to issue these convertible bonds, okay, as a way of cushioning after the 2008 crisis. Credit Suisse released a lot of them. There's $250 billion around the European and global market of convertible bonds called CoCo bonds. Now, these bonds, they're set in a way that if the bank goes into liquidation, those bondholders can lose all their money. They're the first ones to lose all their money. So they get the higher interest rate because they're the first ones to lose their money. Now, Credit Suisse had $17 billion worth of CoCo bonds sitting on the market. And therefore, $17 billion of CoCo bondholders yesterday just woke up to the news that, guess what? Your investment is now worth a big fat goose egg. Zero. You've lost all your money. And that happened to them. And they're really upset. People have lost hundreds. Okay, it's not funny, but people have lost quite a bit of money in general. But I think what shocks me in all of this is that the world seems to be able to absorb losing $17 billion worth of CoCo bonds in Credit Suisse. But when Zambia asks for a 35% haircut, we are being made to do the 1-2 step and the dance back and forth. So the question is, I mean, this is one of the things I wanted everyone to put in their minds. This is what happens when you build your financial system of other people's financial systems. Because look, when they need to give each other a break, when a big bank needs to give another big bank a big break, look what happens. Bam! Everybody can forget $17 billion. They can downgrade assets and they just get through it. In one day, they sorted this out. Well, let me not say in one day, but in a couple of days, from the time where they issued Credit Suisse that $54 billion lifeline, which was last week, they issued them a $54 billion lifeline. And now all of a sudden they've been bought out, their bonds have been zero rated, and the shareholders at least have got 30, and the whole thing is gone. It has just passed like the wind. The only thing is, obviously, the cocoa bond holders are looking to sue the Swiss government for premature action because they're saying Credit Suisse was not in financial distress, and you just preempted it and basically merged two of the biggest banks and allowed. Here's the funny thing: if I give you the equity value of these companies, are people in business value? If you're looking in financials, by the way, if you're going to be an investor, get comfortable with looking at financials and understanding financial ratios. It is going to be the importance. If you want to start investing in stocks, you have to get comfortable with this idea. Otherwise, you're just picking numbers off a screen and you're just praying that they go up. You need to understand the fundamentals driving these. That's what value investing, and that's why you have to read books like The Intelligent Investor. It is very, very important for you to do that because it teaches you what to look for in companies so that you can apply it in your investment journey. Now, looking at, and also securities analysis, two books that are very good at helping people with the stock market is Intelligent Investor and Securities Analysis, are both written by Benjamin Graham, who was out to try and make regular people good investors. That was his mission, and that's the point. And Benjamin Graham, remember that, was the gentleman who happens to be the mentor of the none other than Warren Buffett, the Oracle of Omaha. So remember that Warren Buffett has built Berkshire Hathaway's investment strategy off the teachings that Benjamin Graham taught him when he was working at Benjamin Graham's securities firm, when Benjamin Graham also happened to be his lecturer. So that was the important part. So read those books. They help you understand what fundamentals to be looking for. People ask, does value investing stand in Zambia? Right now, you need to start practicing value investing. But if you're looking at the financials of Credit Suisse and UBS, Credit Suisse had about $45 billion worth of equity. In other words, this company on book value was worth about $45 billion, while Benjamin Graham, Benjamin Graham, that came into my head. While Credit Suisse had $45 billion and UBS had about $57 billion. So here's the reality: UBS has doubled from a 57 billion book company value to a 102 billion book value company. Simply, UBS has doubled its equity value as a business simply by just paying $3 billion. Vernon, less than 10% of its own value. So imagine, Vernon, and I want you to put this in your mind. Imagine you have a house worth 400,000 kwacha, okay? Then another house next to you is worth 400,000 kwacha. But then you're told all you have to do is pay 40,000 and you can have that house worth 400,000. Just think about it. And both of them are rental property. So imagine that's the situation that you're kind of in already. So that is what I'm saying when I say that they literally bought it for a song and they managed to trade themselves through it. So look at how the financial system works for its own. Now, I know Africans will say, that's not fair. How come they're doing? Because it's their money. That's the reality, people. They can do with their money what they please. And they don't have to accommodate you. They don't have to take care of you. All you have to accept is that they will do with their money what they please. Okay? And that's a lesson that all of us have to start learning when it comes to these investment markets. Now, in my deep dive today, I mentioned two books earlier today. And I wanted to give people an understanding of why I've been stressing the spoken word, Vernon, the written word versus the spoken word. Now, we do get blowback when we tell people, look, those who have gotten somewhere, they read a lot, okay? Those who are able to make good decisions with money and business, they read a lot. A lot of people who run businesses read more But I know the young people of today will say, no, but you don't have to. You can get all this money. You can make all this money being a social media this and a social media that. Yes, the problem I have with the social media world is it's the same as the NBA. Okay, it's the exact same as the NBA and the Zambian national football team. Everybody thinks they'll make it, but only a handful of people will make it. And the majority of people will not make it. Okay? Those of you who think you're going to be influencers on social media, for every one person who makes 30 to 40,000 or 50,000 kwacha a month being an influencer on social media, 1,000 of you will fail to do it. Okay? I'm telling you this right now. You will sit there posting things day in, day out, and nobody will pay you anything for the amount of attention you are trying to seek in order to leverage it for money. So, what you all have to start learning to do is creating value. And creating value means manifesting things from your mind, Vernon, and turning them into reality. And in order to do that, you need to be able to think. And you need to be able to think in a deep way that creates value. And that sometimes requires, Vernon, unplugging from the rest of the world and engaging in something extremely intellectual. And unfortunately, people, the most intellectual content on this planet is problem-solving games, but most importantly, books. Because I'll tell you why. As I'm speaking right now, I'm expressing. I'm expressing myself, and part of it has emotion. And your brain is trying to process the words of what I'm saying and processing the emotions behind what I'm saying. Okay, the emphasis that I'm utilizing. And you are most likely going to engage more with the emotion than you are with the words. And therefore, you are going to learn a little bit less from what I'm saying. Not to say there's nothing intelligent you're going to get from what I'm saying. What I'm just telling you is that, given the choice, your brain will connect more behind the emotions of my voice than behind the actual words. And you'll have to try and struggle picking between the two. So that's one. So the reason I say this is, Vernon, when people write books, which are going to go to an editor and which are going to go to a publisher, they tend to think very carefully about what they are saying. Okay. And therefore, you tend to learn a lot. You gather a lot of insight when somebody puts their thoughts into writing. Okay, there's power when that happens to a person's communication skills when they engage in writing. Now, it requires, Vernon, that if you're going to operate in a knowledge economy, and I'm going to share something by Professor Cal Newport, who is the gentleman we've been quoting on this career capital topic, but he's talking about the importance of reading. And I want to share with you this. And I know there's going to be the gibbering off group who are going to say, nah, books are outdated, they're for the old millionaire. Well, yes, we've heard the story. Okay. But I'm telling you that this thing of becoming the social media, it's not going to happen, people. It's not going to happen to most of you. It's going to happen for 1 out of every 1,000. It's similar to lottery tickets. Okay, it's the same. The reason why all of you think social media is the gold mine. It is a good place to sell products. It is a good place to conduct business, but it's not. But you need to limit your exposure to it. Okay, there's only so much it can give you. And in fact, what a lot of people are starting to do finally is revert back to small communities of useful customers, this broad marketing technique. But I want to just quickly talk to you about why he talks about reading, why you should read. And I'm going to share this with you right away. Here it is, Dr. Cal Newport.
Books? Well, I am convinced that if you do intellectual work, so if one of the primary ways you make money is by creating value with your brain, alchemizing dollars out of the stuff of thoughts, reading is critical to you. Why? Because reading is to your brain what exercise is to your body. To work with books means you're grappling with complex ideas, trying to make connections between different types of theories or ways of seeing the world. It helps your ability to empathetically put yourself into other people's shoes and understand life through other people's eyes. All of this is critical. It's calisthenics for the gray matter up here. It is a huge competitive advantage. If you work in knowledge work, you need to work out your brain. Reading is one of the best workouts that we know about. I mean, I find it to be surprising the degree to which we obsess so much about physical health and we get into minutia about different exercise routines or supplements or exactly how you eat, and yet we barely think at all about how to keep our brain operating at its full capacity, even though for most of us, we depend way more for our livelihood on our brain than we do these days on our body.
Okay, so that, you can hear the argument there. If a sports player will exercise their body, okay, sports players every time will get into the. Let me ask you this question, Brendan. If you saw a football player not going to the gym, what would you think about it?
Well, chances are that he's lazy, and the next time he's going to probably want to be or play at a game or something. He's probably going to fracture his muscles or bones because of lack of exercising.
Okay, or end up or end. I was going to jab at Lucky, or end up a sports reporter. Because Lucky looks like he used to be a football player. He looks like
At
he
some
used
point.
to be at some point he used to be on the field, but he seems to be missing a step now. So we'll leave
Yeah,
it.
you can see his spot belly is actually overtaking his chest.
You can see. No, we're gonna stop cyberbullying, Lucky. Let's stop that now. But yes, brother, brother Lucky, we have love for you. We know that you were a superstar once upon a time. But what you'll see is that if you were a football player, Vernon, would you not spend every day exercising? If you were a professional football player who used your body to make money on the football field, would you not spend every day exercising?
Sorry, I didn't get that.
If you were a football player and your
Right.
job primarily depended on your body being at peak fitness, would you not play football? Would you not be in the gym exercising?
Of course, you have to. It's like the interesting saying of having to go to the hospital twice every, say, 3 months to see a doctor, unlike you, going to the doctor once a year for about 2 hours. Brushing your teeth every day for 2 minutes would actually save you a lot, unlike you not brushing your teeth, in a space of a month and only brushing once. It's going to cost you more. It's a
Yeah, it'll
process.
cost it'll cost you a marriage life. I can tell you that. Nobody's gonna be one next. No one is gonna want to greet you if you don't brush your teeth every day. Um, but, but let me put it to you this way: if you make money using your mind and your brain is a muscle, okay, then how are you exercising it? Absorbing information just through social media and then just gathering tidbits here and there. That is not exercising your mind. That is shallow work. Okay, we're going to talk sometime in the future about deep work versus shallow work and getting into the depths of life and what people need to start doing. But if you are going to start engaging your mind as a muscle that you need to expand your horizons with, in other words, and
Mhm.
especially when you're dealing with money, okay, when you're dealing with money, guess which muscle is the important part, Vernon? It is your brain. Your brain has to make good decisions whenever you want to when you want to engage in finance. Okay, so if you want to do that, you must exercise it. How are you exercising it? By reading good stuff, and then two things: one, you must read, and two, you must apply. So I want you to think
Yep.
about. Let's go back to the sports player analogy. Somebody just hits the gym all day long, okay? As Collins Besuma said, I just lift metal or I run away. But you just want to lift metal and run away all day long. But you never set foot on the football field to apply your newfound fitness and strength. Are you going to be a good football player?
Chances are your body will be in a different way, that it'll be difficult for you to run, because I mean running away and running on the pitch is definitely different, and it needs uh, a kind of sophistication. That is what there are all these different drills to synchronize your workout and skills on the pitch. I think it's essential that you do that.
And also you need real world exposure to be able to apply. So the
Away from
problem
the
with a lot
machines.
of people, it's two things: you apply without reading, so you're blind, or you read without applying, so you're lazy. Okay, no, this is what people do. They don't understand that they are. If you read something called Bloom's taxonomy, which it's talked about in teaching, that a person must first be able to recall and remember something, then they must be able to understand it to the point where they can explain it, then they must apply it, then they must analyze what they've applied, and then they must evaluate the application to create new wisdom and knowledge. That is the levels your person has to go through. So the problem is everybody accumulates so much information, they never apply any of it. Okay. And so you're knowledgeable, but you're not wise. So what happens to a person is the more wisdom, okay, wisdom is applied knowledge, by the way. The more wisdom, applied, analyzed, and evaluated knowledge, the more wisdom that you actually acquire as a person. Okay. In other words, and I want you to think about this before I even get any further. Knowledge is what you know. Wisdom is what you believe to be true. There's a big difference between the two. Okay. And the reason is this: wisdom is the basis of your decisions. Knowledge supports your decisions, but wisdom is the foundation of every decision that you make. You make decisions because of your levels of wisdom. Okay. So everything you make, so Venom, you can know 10,000 things, but the decisions you make will reflect what you believe. That is what it'll tell you. It'll reflect what you believe. So wisdom is what you believe to be true. And that's probably the principles by which you live your life or follow your life. If you lack principles, then you'll be moved by the pressure of the world of trying to keep up. But that is what you're going to try and do. Okay. I will look at somebody who says, give me 6,000 and I will make you 90,000 in 2 weeks. And my brain tells me that principle does not operate correctly. I do not believe that to be true. So no, thank you. Okay. That is what my brain tells me, because there's a principle in there that believes in slow compounding interest, that understands from the back ends of looking at businesses how money is made and how money is grown. Right. So I really want as many of us to really start focusing on this fact of, when it comes to knowledge is the truth. Wisdom is knowledge is what we know. Wisdom is what we believe to be true. And if you acquire more wisdom, your decisions get less risky, because you have principles and heuristics that allow you to now start making more decisions in a stable fashion. Yes, you will miss out on certain things. Yes, when Bitcoin quadruples in 1 week and you may not participate in it because you didn't want to put all your money in it, and you decided to put 5% of your money in it because you thought of it as wealth insurance instead of a full investment, sure, you'll miss out on that. But you'll also be spared when it goes from 4 times its value back down to 1 times its value. Okay, you'll be spared from a lot of things. So I want you to also remember that in the fact that when you operate in wisdom, you sure will miss out on a lot of the excitements of the world, but you'll also be spared from a lot of the disasters of the world. Okay, that is what you also have to bear in mind. And people, yes, will tell you, oh, you're gonna miss out on this, sure, but I'm gonna be spared when it all comes crashing down. That's the part I'm going to be spared from, because I know when people start moving like that, I've seen enough. So wisdom is acquired from Jordan Peterson. Quote said this sentence. He said, "There is no shortcut from knowledge to wisdom. You can accumulate as much knowledge, but you have to apply that knowledge systematically for it to convert to wisdom, so that it becomes the basis of your decision making." So that's just something you have to try and think about. Now, Vernon, that is my deep dive, and that's why I think in Zambia we have to promote reading culture. Whether it's reading 2 books, whether it's reading 1 book a month, 2 books, 5 books. Some people read 5. I try to get to 4 because I give myself 4 reading sessions a day, 30 minutes, different things, because I'm trying to also shape myself in terms of what I'm trying to do. That's a different story. But there's other people who read 2 books, 1 book. That's fine. But just get into a reading habit. Okay, I'm telling you this because Zambians will say, but we want China's results. China has evolved into such a great country. Look how fast they've grown. Well, do you know that Chinese read 3 to 4 times more books than the average Americans? Okay, so you want China's results, but are you putting in the work? Because Chinese people read for learning. They don't read just for fun. They read for learning. Okay, they read to apply. So the Chinese group of people are very strong readers. So as Zambians, if you want China's results, I'm not saying you just read. You read, you apply, you become disciplined. There's various factors in it, but it's one of the important pillars. Okay. And I'm sorry to say this, people, there's just not that many people who get somewhere in life without reading. But let me just be honest with you. I personally don't even like it that much. I personally don't even like reading that much. I think it can be laborious, can be tedious, but it's a habit you have to build. It's like eating vegetables. We don't really like them, people, but we choose to because we understand they're a healthy portion of our diet. Okay, they're a healthy part of our diet, and in fact, vegetables have to be half your plate half your plate, not a quarter, for you to actually have a healthy diet. Okay, we all want to eat the sweet stuff, the salty stuff, the meat stuff. We all want to eat that stuff that excites our tongue. But the reality is, you must consume the healthy stuff that builds you. Okay, so that is what people have to understand. What is the stuff that develops you? So the content you should be consuming, whether it's in book format or anything, is what I say. I break it down into what I say is 4 eyes. I look, Vernon, at things that are going to improve me, things that are going to inspire me, things that are going to enhance my intellect. Okay, so I'm looking for intentional material which improves me. I'm looking for inspirational, so in other words, stories of businesses or people, because I'm in the business space, stories of businesses or people who have been where I want to be. I'm looking for intellectual material that will train my mind in a specific skill, I am looking for industrial material in my area. Okay, so I need to know more about my industry. So if I'm reading those areas, I'm enhancing my mind, because I don't know, Vernon, I make money using my brain. That's the reality. So I've chosen to exercise it so that it can work at peak performance, so that I can utilize it for as many things as possible. I have to create things out of my mind in order to make a living. Okay, and if you're one of those people who operates in the knowledge economy, which the majority of you are, by the way, you are now operating in a knowledge economy where the things you know, or the things you understand, even your brain. By the way, even some football players have to use their minds, by the way, but they use it in a different way. They use it in a more tactical way. Okay, I'm just saying you have to sharpen your mind. If you're going to make money for a
But
long period of time, the brain is the biggest source. Yeah.
sorry to cut you short. Thinking about reading and reading something that stimulates or educates or enriches your thinking capacity and just ideally you as an individual. I have spoken at least to, those interactions where, you start off quite well and you seem to have a few things in common. And then when you ask, what are you reading currently? Most of the answers I've gotten from the conversations I've had, at least from a number of at least 5 to 7 people, is that they're reading romantic comedy novels. So now people who are reading, such kind of material or genre, would you say it equally qualifies to enriching one's capacity? And I mean, we're trying to get into the reading culture. Does that also count when it comes to one
No,
reading?
there's nothing
Romantic
wrong with
comedy?
reading nonfiction. It helps you become more imaginative. Okay, there's nothing wrong with nonfiction reading. It does help you become more imaginative. The thing is, you just have to couple it with stuff that actually enhances you. So I want you to think about books like food for your brain. Okay, you eat food, Vernon, because there's a specific diet you're on, because there's a specific outcome you want. Maybe you want to bulk up, so there's specific proteins you start to eat. Maybe you want to lean out, so you cut out a lot of fat. So whatever you want to do, you'll engage in it. But doesn't mean often you can't spice up your food once in a while. It doesn't mean that you can't have an ice cream here or there. You can enjoy yourself once in a while. Go into the
Mm.
pursuit of that. That's more about your preference in order for your entertainment. So you can go ahead. I don't think we should shame people for that, but I just think it should be coupled with, if you want areas in your life to develop, you should be reading in that direction. That's why I always tell people, read for your season. Now, quickly, Vernon, just one final thought I'm going to give you is my chart of the day, alongside my quote of the day. My chart of the day is actually got to do with financial literacy, and it has to do with what I call the problem of wealth products. And if you take a look at this chart, when we compiled this, this is the percentage of Zambian adults who invest in wealth products by each of these wealth products. And by what you can see here, we have a very low percentage of Zambian adults investing in the things that are mainly long-term wealth products. 1.7% of Zambian adults have health insurance outside of NEMA. 1.38% of Zambians have life insurance. So in other words, only basically, how do I put this, Vernon, in the nicest way? About 13 out of every 1,000 people will have a 1,000 people who die will have a life insurance policy. 13, okay? 13 out of every 1,000 people who die in this country will have a life insurance policy. So really, people, it's highly unlikely you're going to collect life insurance money from anyone in this country. Meanwhile, life insurance is one of the ways that you do find, if people have not built wealth, okay, in a sort of an asset pool. Life insurance becomes one of the ways that people are able to transfer wealth if anything happens prematurely. Okay, and also it's a way to also protect your loved ones if you structure it correctly. Funeral insurance, Vernon, only 1.3%. So in other words, 90% of the deaths in this country, 98% of the deaths in this country are handled by people circulating pieces of paper and trying to collect payments, as opposed to a person having a funeral policy so that people can grieve your death in peace, instead of them having to run around to deal with your death. So we have to deal with collection baskets most of the time. Now, I know that, yes, 90% of our country does live in poverty. We do understand this. Quite a number of the households, only 20% of the country's population is in the formal sector. I get that. I understand that. Only 1/10 of the adult population, let me say, is in the formal sector. I get that, Vernon. I truly understand that. But why can't we even get just that 10% of the people who are in the formal sector to start at least having funeral insurance? It would make life a little bit more easier, just if we can get them and then focus on growing. My problem is these numbers don't even capture the formal sector people. Okay, they are, Vernon, right now 950,000 people who are paid formally, 900,000 people who are paid formally, and there are 200,000 employers. Can't we get those 900,000 people paid and the 200,000 employers at least to start building themselves in a life insurance capacity? Your NAPSA does have life insurance to it. I should tell most people that if you've done 3 years of contributing to your NAPSA, I think there's a 12,000 kwacha funeral grant that is actually attributable to you. So that if you pass away, your loved ones, if they've put money together to bury you, they can go and claim back. Whoever is your beneficiary of your estate can claim back 12,000 kwacha on a funeral grant should you die before you claim your pension. Okay, after that, tough luck. Now, the other part also is now pension investment. People who are investing in pension outside of NAPSA. Remember, NAPSA is obligatory, so that's why people do it. But people who are investing in pension outside of NAPSA, only 1.26% of people are building their capital in pension. Only 0.6% of Zambians are building their money in capital markets. And only 0.3% are investing in education savings plans. So this already tells you, Vernon, the low number of people who are engaging in wealth creating process. And this is our chart of the day. This was derived from the FinScope report 2020. This was 2020. So this shows you that in as much as we're talking about 60% financial inclusion, we are really only looking at very low levels of wealth inclusion. So wealth inclusion levels are still 99% out of the hands of most of the people. Yes. So in other words, Vernon, we are training spenders more than we are training wealth builders. And people are therefore burning their money away. And my quote of the day for people who do want to become wealth builders comes from Mary Callahan Erdos, who happens to be the head of JP Morgan's wealth management division, where she manages $3 trillion worth of wealth. And she said, never invest in something that you cannot understand or that cannot be explained to you simplistically. Always go for simplicity. And the number one thing, Vernon, most Zambian investors are looking for is simplicity. That is the number one feature of investing. Liquidity is the number one. Number two is simplicity. Number three is accessibility. So the three most important things that a Zambian is looking for when looking at a saving and investing product is liquidity. In other words, can it be turned into liquid, or does it have liquidity events built into it? This is why I always talk about bonds. Simplicity. How easy is it how simple is it? And accessibility, can I reach it? Can I use it? Can I engage in it? Those are the main things. And with that, Vernon, I close off today on today's conversation. Tomorrow, we will now be going into trying to segue from building a career into building a business. That transition from building a career into building a business, I'm going to give you two things, Vernon. I'm going to give you what a person should be doing in terms of deliberate practice, following an interest, and also sticking to an industry. And simultaneously, Vernon, I'm also going to be talking about 7 trappings that happen to people who look at transitioning from a job to a business. That transition, how does it affect them, and what should they be looking out for? And if they want to step out and they feel they are a founder of a company and they should get that company, what are the signals that they're looking for? I'll be talking about that tomorrow.
I appreciate it. Thank you. We're looking forward to that.
Have a good day.
Thank you.